Welcome, everybody. Today is December the 5th, and it's been another week of fun in the markets. And I'm here today with my normal cast of characters, Rachel Ivanovich, who's over here, Vince Stefano, who's joined us nicely, and Greg Carroll, another one of our outstanding financial advisors, CFP, and all the other initials that come with it. And I'm Steve Wolf. And I don't know why I'm stalling for this. What happened this week in the markets there, Vince?
Well, the market's had a nice move this week. We've had a couple of days where the market was flat, and then it rallied pretty hard on technology stocks yesterday. But, I want to talk about something that my clients and even non-clients have been talking about or asking me about over the last couple of weeks, and that's the potential of what tariffs may do to the market. Now, there's two schools of thought. There's one school of thought that said, hey, tariffs are bad, Trump's going to get us in a trade war, it's going to lead to higher inflation, markets are going to crumble. There's another school of thought that says, hey, tariffs may be used as a negotiating standpoint. It may force companies to bring more manufacturing of products and services into the U.S., boost our economy, and increase our tax base. Now, I'm not sure which one of that is going to happen, but, hey, I'm an optimist. I'm going for number two. But here are my suggestions, and I've told clients and non-clients this. Number one, I don't believe the market's focusing on tariffs right now. It's focusing on, one, will the Fed continue to cut interest rates? Number two, it's been focusing on third quarter earnings results and guidance, and it's now focusing on consumer spending into the holiday season. And what's kind of interesting is that there have been some reports out from both Adobe and Shopify that has said that the Black Friday, Cyber Monday sales have been up quite dramatically, a little over $11.5 billion or a little over 24%. And what the consumer has been buying? Clothing, cosmetics, and fitness. Now, I'm not sure if it's fitness equipment or if it's just fitness clothing. It wasn't made clear. So my suggestion for my clients and non-clients, don't make any massive changes to your portfolio until you find out exactly what happens after Trump gets sworn in on January 20th. If you have a lot of gains in your portfolio, you may want to take a little off the top. If you have losses, maybe sell some sell your losses.
The big problem is that, honestly, we don't have many losses.
Well, I'm just saying, if you have some losses, sell some losses. If you like the stock, wash sale them, buy them back 31 days later. But until
when you say wash sale them, what do you mean?
Oh, it means that companies that are showing a loss in your portfolio, you sell them, you take the loss in this tax year, and then you buy them back 31 days later so you can write them off.
If you buy them back before that 31 days,
you
however,
lose.
You lose
All
the
right,
tax.
I'm going to jump in here. I'm the tax advisor at the table, right?
Well, I'm not finished yet.
Wait, I want to hear her for a minute.
All right. So a lot of people want to know what they can do before the end of the year to reduce their tax bill, or overall, how do you reduce your tax bill? And so, Vince, what you were talking about was
you can make less money.
You could make less money, but nobody wants to do that. That's no fun.
You could give it away.
You could give it away, which is another point.
Have we hit on any of the ones that you wanted to talk about?
I actually have 10 points, but we can come back to that later.
Talk about wash
So we're going
sales.
to talk about wash sales. So one of these strategies for the end of the year that a lot of people will do to reduce their tax bill is to look at their portfolio and look at where are my unrealized losses and where are my unrealized gains. And you want to net those gains and losses to wash out the gains. That's why they call it the wash sale. And the rule is the IRS doesn't want you to do this necessarily to minimize your income. So they enacted a rule where if you sell some of your gains and you want to wash them out, you sell out the gains and you guys are, you're funny today. So you sell the losses and you have the gains, they wash out. You can't buy back the stock until 31 days have passed, because otherwise the IRS says you can't deduct those losses.
So on the 32nd day, you can do it.
You can buy back the stock.
Didn't I say that?
I think that we
So
covered it. We agree. Yes, definitely.
Way to go. Oh, The only thing, and the other, I could, great. I'm going to wash gains, losses. All right. Again, don't make any major changes to your portfolio, but as we get into 2025, I want to continue to emphasize, like Steve and I have been talking about a lot, technology stocks. There's, AI continues to generate massive amounts of profits and continued acceleration in products going forward. So, guys, keep your portfolio in check right now. Don't do anything dumb until you find out what the new president's going to do.
Well, I hope we don't do anything dumb even after that. But, the thing about technology stocks is I love them, but they are expensive. So, before anyone goes out and says, oh, yeah, I'm going to buy all my technology stocks, you better take a good look at what the actual price is and what the companies maybe are worth. They may be a little bit overpriced at the moment. We'll see. I have a feeling that after the first of the year, you're going to see some sales. I think people are because of taxes, capital gains, I think people are waiting until next year to sell some of those gains. So I'd be a little bit careful about buying big time into technology at the moment.
It will be interesting to see how people reposition between January 1st and the 20th when Trump gets in, because there is going to be a lot of talk about, his cabinet that he's trying to put in place. Are they going to be confirmed or not? There's already been a couple, shuffling of a few that, he's wanted to appoint, but, for various reasons, they probably aren't the best choice. So I do agree with Vince. I wouldn't make any big changes at this point. We're going to see a little bumpiness here until Trump gets in, but I think it's that first 100 days with Trump to see how much, all the Republicans really coalesce around him, because it's a thin margin. They have the House, the Senate, and the White House, but it still is a thin margin. So it's going to be interesting to see how that all works out, that first 100 days.
So, Rachel, you were talking about you have 10 points for...
I don't have to hit on all 10, but it is that time of year to be looking at your income. And okay, we'll keep it top five. We already talked about wash sales. We already talked about gifting, but
the 10 top 5 reasons
that you should talk with your tax advisor before the end of the year.
Okay, here we go.
We want to reduce your tax bill. And so number one, you want to be meeting with your tax advisor to find out, should you be accelerating income or deferring income? Do you take it in 24 or 25, especially if you're self-employed? I think all three of you said it's probably not a great time to be selling things or moving things around before the end of the year, but do look at the entire picture of what is my income so far? What are the different sources of income? Maybe you want to accelerate expenses. Maybe it's time to go out and buy a van or a truck or something like that, depending on what your business needs are. Not a recommendation, but talk to your tax advisor. The other thing is, we did touch a little bit on gifting. It's that time of year where a lot of families are thinking, how much can I give to a relative? And so then that number is $18,000. And if you're married, you can give twice that.
To a particular person.
To an individual, correct. So if they're married, then you can double it. Yes.
But it's not a tax deduction. It's just
it's not a tax deduction. It's a way to reduce your overall estate.
Right.
And
advanced estate planning.
Exactly. Yes. And there's no paperwork to be filed if you keep that number under $18,000. If you go over $18,000, then you have to file a gift tax return. The person who receives the gift pays no tax and doesn't have to file any paperwork. So it's that time of year. A lot of people are thinking about that. This is the time of year to be completing any Roth IRA conversions, and that's Roth IRA stands for individual retirement arrangements. So this would be where you look at your traditional IRA account, so individual retirement arrangements, look at the balance in it. You can say, I can take a portion of that if potentially you still have some room in your tax bracket, and maybe you're in the 12% bracket. Maybe you had a down year with your income, and okay, maybe I have $50,000 worth of wiggle room. I can take $50,000 and convert that over into a Roth IRA account, pay the tax in 2024, and that then it grows tax deferred, comes out tax free later on. So it's a great retirement vehicle, but that may be something that you would need to do that conversion before December 31st.
And that's something, we talk about Roth conversions a lot.
Yes.
It seems to me that if you are almost at retirement and you've got a lot in your IRA, making that conversion at least for the entire amount, usually isn't
The
a great
best
thing
decision.
because of the amount of tax that you're going to pay at that point in time. But a partial conversion, maybe.
It might make sense to do a partial conversion, especially as you're approaching. I mean, there's some things to consider, such as the Medicare surcharge. You want to make sure that you're not kicking yourself over into that. But it definitely, a partial Roth conversion could make a lot of sense because Roth IRAs, if they're not inherited accounts, there's no required minimum distribution from Roth accounts versus traditional. So it does bring down that overall required minimum distribution, or RMD, that you would have to take out of your traditional accounts.
And I think a lot of people that have done really well saving for retirement in 401ks and IRAs, sometimes they do end up with so much in there that when they hit the required minimum distribution age, which right now is 73, that required minimum distribution might be a little too big if they don't start
Planning
earlier,
early.
converting some along the way.
Because
like
you
you said,
could-
keep it in the lower tax
You could even do
brackets, but-
5,000, 10,000. It doesn't have to be a huge amount. It
Right.
could be a small amount, but really work with your tax advisor. Look at where you are in your tax bracket, and at one, where do I hit that upper limit, so they don't go into the next bracket. And if you haven't taken your required minimum distribution yet for 2024, make sure you take it before the end of the year.
If they don't take the RMD, required minimum distribution,
There is a penalty.
What is that?
That is 25% of what you did not take. So make sure
that's a hefty penalty.
It used to be 50%, so at least it's come down. If you take it before the IRS finds out, then you can waive. There's a form that you can file to waive. So if you have forgotten,
I don't know if the IRS
Oops, I forgot.
it's an oops, I forgot form.
They always find out.
Well, didn't they hire like 80,000 more IRS agents?
Exactly.
So,
Yeah, but
all right, what point are we on now?
So the fifth point is, if you do own company granted stock options, this might be a really good time to consider, maybe I can cash some of those out. Also look at where you are in your tax bracket, and do I have some wiggle room, and can I cash some of those out?
So I want to go back to the tariffs for a minute that Vince talked about in the very beginning. Yes, there are different schools of thought. One of the reasons I think that the Trump administration is talking about tariffs so much is it's a negotiating tool. I mean, I don't know if any of you noticed, but Trudeau from Canada has already been in Mar-a-Lago talking to Trump, and I'm sure it's because of what he was talking about tariffs. But I still don't think that ultimately, tariffs are not going to be the reason that the markets do great or not. I'm still sticking with the amount of money that we are borrowing. Our debt service keeps going up. I'm not exactly sure of the percentage of our budget that goes to paying off the loans that the U.S. government has made, but it's one of the largest items that we have.
One
I
of
think
the largest line items.
Right. So if that keeps going up, it won't matter about tariffs or anything else. I mean, at some point you go broke. Now that could be tomorrow or it could be 30 years from now, but at some point you just can't keep printing money, which is inflationary. And I mean, this is what the Weimar Republic of Germany did. And that was one of their downfalls. So speaking of the CNN Fear and Greed Index, I was just looking at that this morning, and surprisingly, we're only barely in the greed section of it. We're about, I think the number was 58 out of 100, and I would have thought that we're in a higher greed area than we are, but we're
What
not.
was it a week ago?
It was in greed, but it's actually less now than it was about a week ago. I don't remember the exact number, but it's slightly down from there. So you think that everyone is excited because the tech stocks have gone up, the software stocks have gone up, and it's broadened out as to what has gone up. So this is actually the last 2 years since we hit a low in October of 22, I believe it is. These last 2 years have been really good. Some of it, I'm not sure why, 100%, but I think a lot of it has to do, I would think, with technology. Okay, I mean, that has carried the day, and it's still carrying the day. Whether that continues or not, though, who knows?
Well, just remember, companies respond to earnings and revenue. And as long as the earnings keep going up and the revenue streams keep going up, companies will continue to do well because their valuations will look very
Right.
reasonable
But
to the
that
investor.
but that doesn't mean that the stock price will go
No,
up
that's
because
true,
that could
but-
already be in the price.
All I'm saying, though, is that's what's going to drive the price of stocks going forward. Now, if the Fed continues to cut rates, then stocks are going to look very favorable on a relative basis from a valuation standpoint. So, there could be a little boost from Powell if he stays on. I don't know.
Yeah,
that's another
that's
story.
another
That's
discussion.
another discussion for
he
another
did say no.
podcast.
He did say no to resigning.
That's true, he did.
So far, it looks like he wants to stick it out.
Hey, I have a quick question for you. If you have to pay for a wedding, can you write that off your taxes?
Somebody get married?
That is a very gray area.
just curious.
It's a corporate wedding.
The question is, if you don't pay for the wedding, what happens to you and your family arrangement?
I won't have to I won't have to worry about gifting any money.
Yes, the divorce lawyer would be right there.
How many of your clients will be attending said wedding? Is the question.
Hey, that's a good point.
There's an
Gray
angle.
areas.
There is an angle.
There you go. That's an angle. All
You
right.
can always count on Rachel to give us the gray areas.
Give me the gray area.
It's the law. Come on.
So, anyone else have anything to say for this?
Make
particular-
sure you fully fund your 401k before December 31st and take advantage of any other employer benefits before the end of the year. If you have an FSA or flexible spending arrangement, make sure you are using that money. Otherwise, you will lose it before the end of the year. And it is open enrollment period, so you can consider whether you're funding that FSA, the flexible spending account, or HSA, health savings account, before next year.
Keep focused on some real retail stocks as we move into this holiday season.
And always keep focused on stocks, on companies that have a good balance sheet, that have good growth, that are solid companies, or ones that are just on the cusp of doing that. I think, that's probably I think that of all the things I've learned in the last 40 years of doing this, I think that's probably the best tip that I was given, and I think it works. Just have good, solid companies. I hear a lot of times about, the stock market is just a casino. Well, with casinos, if you stay long enough, you will lose your money. In the stock market, if you stay long enough, you will make money. So they're not even close to being the same. However, a lot of people treat stocks like they are casinos, and they take companies that don't have earnings, that may not have earnings ever, that are speculative, and say, oh my God, this is going to be great, and then they lose money, and then they say the stock market is bad.
Yeah, they're trying to hit the home runs and dealing with these meme stocks that go up 100%, 200, 500, 1,000% in a week. That's not investing. That is gambling.
That is gambling.
That's a casino. But Warren Buffett has been doing this longer than you and I. And you're right. Stick around long enough, buy the good companies, cash flows, earnings. If they're going up, you're going to make money.
Right. All right. Well, that's it for this week. And today's the 5th. We will see you on the 12th of December. Thanks a lot.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.